Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Friday, July 24th, 2020. Here are our top stories. Workforce confidence in the U.S. is divided, and special purpose acquisition companies have raised considerable dollars on U.S. exchanges. Well, joining me now to discuss this and more, Devin Banerjee is Senior Financial Services Editor for LinkedIn, and he's also the editor of the This Week in Finance newsletter, which of course you can find on the LinkedIn platform. Devin, great to talk to you. Great to see you. Thanks for joining us this morning.
Absolutely, Jeff. Always good to be with you.
So every 2 weeks, LinkedIn produces its LinkedIn Workforce Confidence Index. And we like to check in and talk about this because it gives us insight as to what people around the United States and probably the world are thinking about their prospects for jobs. So what can you tell us? What are people thinking?
Absolutely, Jeff. Very important initiative on our end here at LinkedIn, trying to keep our finger on the pulse of how people are feeling through this unprecedented time. It's a measure of people's outlooks, as you said, in their current jobs, their careers, and their personal and household finances. So because the second calendar quarter just came to an end, April to June, we did a bit of a quarter in review, if you will. And I'm going to point out some of our findings here. I'm going to click around if you forgive me, because there's so much data and I just want to have it accurate. Really what we led with this time was how confidence is changing in the most populous states in the U.S., especially those that have had divergent approaches to reopening their economies. And so what we found here is that confidence in states such as Georgia, Texas, and North Carolina really have taken the largest hits toward the end of the quarter in that month of June. And if you think about it, these really correlate with those states that reopened quickly in the spring, only to see cases of COVID-19 spike, and then those state governments attempted to roll back or pause their reopening plans. Where confidence was rising and trending in the right direction was among states that have, of course, seen a decline in COVID-19 cases. So this included Illinois, New York, Pennsylvania. These are places where we saw professionals really brighten their outlook for their jobs, finances, and careers. So, of course, this sounds obvious where cases are rising, where cases are falling, but kind of very interesting concrete data here. Again, statistically robust surveys that we at LinkedIn are running with statistically significant results. So again, very concrete data for policymakers, business leaders, and other decision makers across the country.
Devin, I was really interested to see some of the small business data. As we often talk about the lifeblood of the economy, really important. Many businesses, I think we talked about on the network previously, over 100,000 businesses have been shuttered. Small businesses have been shuttered and may not reopen, especially if they have a resurgence of COVID cases. Is the small business confidence in line with what you see in the aggregate of the other confidence data?
Yeah, it's a great question and a very important one, as you alluded to, and you and I talked about this last week. I mean, almost half of economic activity in this country, in the U.S., involves a small business. So what we found in our data is that small businesses really have their own heat map, if you will, different from the overall data that I just shared with you. So in terms of small businesses, let me just home in here. Sure. In the Northeast and the far west of the country, we really saw rising confidence among small business owners and operators as the second quarter played out. So again, Northeast and the West Coast. Back in April when the quarter began, the Southeast was the most upbeat region among small business owners and operators. Of course, there, as I said earlier, is where many of those states saw cases of COVID-19 surge, places like Georgia and Florida. And so that is where we saw confidence really dampened toward the end of the quarter among small businesses. So again, their own kind of heat map there, but generally correlating as well with where cases are rising and falling.
In terms of the feedback you've gotten, LinkedIn is a source of great conversation.
Yeah.
Any feedback from maybe economists who are on the platform, which I have to think is all of them, right? I mean, they all probably have a LinkedIn account. 700 million people out there who
Sure.
do. Any general feedback from people in the industry, economists, other people who are thinking about either investing or maybe restaffing?
Yeah, as I said, business leaders generally have very much appreciated this data coming from LinkedIn. I would say this one in this story this quarter in review that we highlighted in particular did draw quite a lot of political commentary, which is not always what we're going for. But it really strikes at the heart of some of the issues we've had with dealing with the coronavirus pandemic overall, as well as figuring out policy for reopening in this country, which is it becomes political very quickly, which obviously we all objectively know it should not be doing that. That's just going to hamper and hinder whichever path we as a country pursue. But that did emerge in this conversation, and again, it just reinforces that many of the conversations we're having in our homes or our communities or among friends, and certainly at a municipal and state and federal level, many of those conversations just turn political very quickly when they should be focused on the root of this problem, which is a health pandemic and the health outcomes that we need to see to get over this. But as you said, this measuring confidence as we do is so important to the economy. I mean, when confidence is rising, consumers step up their spending, capital flows again, businesses are eager to hire again, they're infused with optimism. That affects their investment plans, either as businesses or as personal individuals. Their job applications, rates of education improve with optimism for the future and confidence. So many ripple effects, and that's why it's so important to track. I will say before we end the segment, we also saw some other interesting takeaways from our quarter in review. One was about, and this is a little nuanced, but it's about your job function and whether you would prefer to have that job function in the industry that's aligned with that function or another industry. So I'll give you an example. If you're in media and communications, would you rather be doing that kind of function in another industry like a healthcare company or a consumer company, or be at a media and communications outlet or firm or public relations firm? And what we found were some really divergent trends there. So media, for example, which I just mentioned, they show much higher confidence if they're working for a non-media company. So that really goes to show how many of these industries are faring. That same trend is true with people in art and design. They want to be doing that function in a different industry rather than being in the arts or design industry. The opposite is true for people in finance functions. They would rather actually be working in financial services right now during these past few months. That's where they feel safer, more confidence, more optimism for the future. Also the same with legal specialists. They want to be at a law firm or at a legal services firm rather than doing that function at a different company or a different industry. So yeah, some interesting nuances there for all of us. You can look up what function you consider yourself having and see how people's confidence varies in the industry or outside the industry.
Yeah, really interesting, really fascinating bit of information. Well, Devin, I want to go to a quick commercial break. When we come back, we're going to talk to Devin about special purchase acquisition companies and how they've seen a rise in money from exchanges, U.S. exchanges. We're going to talk about that right when we come back, right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings in retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Devin Banerjee of LinkedIn. Devin, so great to see you. Thanks for staying with us this morning. And I guess I should correct myself because in my outro from last segment, I said special purchase, and it really is special purpose company. All right, so acquisition company. I better turn it over to you before I get fired. Tell us a little bit about what SPACs are and then how they've seen a swelling of money through U.S. exchanges.
Absolutely. They are really very active right now. People are calling it the SPAC attack. And actually, it's funny that a lot of people don't even know what the acronym stands for because these have been kind of like a dark corner or a darker corner of finance in recent years. Their reputation was actually not great a few years ago, often seen as a way just for opportunistic sponsors of these vehicles to grab a big portion of the deals that they do and then move on, basically. So compensation schemes versus investment strategies. We're really seeing a return of SPACs right now, though. As you said, special purpose acquisition companies, often referred to as well as blank check companies. So what is a SPAC? It's a pool of capital raised in effectively an IPO of itself. So sold, units of it to public investors, including, retail investors, people like you and me, with the intention to later acquire a business. So, or effectively merge with a business and thereby take that private business public. So I'll get into this a bit later in the segment, but it's effectively an alternative to a traditional IPO or a direct listing for a business to become a public company. And so, investors in these SPACs are effectively wagering that the reputation, the track record, the deal-making prowess of the SPAC manager or the sponsor will translate, into the purchase of a great business at a good price. So as I said, these vehicles are looking for one deal, one acquisition. The sponsor of these are typically, in the best cases, I would argue, and I think anyone would argue, in the best cases, the sponsors are experienced deal makers, and we're seeing a lot of that, private equity professionals, bankers, or teams of those types of professionals. And as I said, and you alluded to, SPACs are on a tear. So they've raised more than $13.5 billion on U.S. exchanges this year. That's an all-time high. Just this week, we saw billionaire investor Bill Ackman's Pershing Square raise about $4 billion. That's a record in SPAC space for a SPAC. The funds at Pershing Square are also planning to add capital on top of that for whichever deal the SPAC pursues. So you're looking at about $6 to $7 billion of equity. You can layer on some leverage to that, and that SPAC could acquire quite a sizable business in the future. And on that point, what's interesting for people to know, or potential investors in SPACs to know, is that the SPAC doesn't have to specify its target acquisition when it's raising the capital. That acquisition target is not pre-identified. The sponsor usually lays out some vision or criteria for what kind of deal they would like to pursue. That could be industries they want to look at, geographies they want to look at, size of business they want to look at. So for example, Bill Ackman's recent SPAC that I just mentioned, the filings there suggested looking at mature unicorns, so private companies worth more than $1 billion. Also targeting, businesses that were prime IPO candidates, so businesses thinking about which path it should pursue to become a public company. Ackman's filings also said they would look at private equity-backed companies in need of capital. It's pretty obvious. Also, family-owned businesses. This is an option for them to bypass that IPO process and become a public company.
It's interesting the way you describe it, and before you even mentioned Mr. Ackman's prowess and his company, it made me think about private equity. It sounded in a lot of ways like a pool of money, similar to private equity. And as you know, Devin, because you cover this space and have for quite a time in terms of private equity, there's a lot of money sitting on the sidelines. So I'm wondering if this is just another way to, as an investor, instead of maybe investing directly with a private equity company that invests in a portfolio of companies, you invest with a SPAC, and it's another way to kind of, although you are kind of focused, right? It's a focused type of investment, but it just sounds like that's a way for you to take some of the dry powder that you would have given to private equity companies and invested there and said, okay, I like this person or this investment group. They're going to invest in something that's going to be meaningful. I trust them. Let's go for it.
Yeah, it's certainly true that SPACs raise money from institutional investors, the same that also consider private fund investments in private equity or real estate or infrastructure or private credit, private debt. So there is some of that dry powder that can be and is being routed to SPACs. What's also interesting, as I said earlier, is SPACs raise money in the public market, in effectively IPOs of itself. And so retail investors who don't have that access to private closed-end funds do have access to these type of private equity style deals. Now, what you said is also very important, which is SPACs have a focus, which another person might call concentration risk. So you're betting on one deal manager or sponsor, and then one company that SPAC is going to acquire, and you don't have a say, by the way, in what that company is. So it's not a diversified private equity fund of maybe 30 portfolio companies. It is one business. But the appeal here, outside of the investor appeal, the appeal for sellers or companies, as I said, considering to whom to sell or what route to take to the public market, that has really been an interesting conversation right now, because it dovetails with this other conversation about the broken IPO process. You hear this a lot from like luminaries in Silicon Valley here, venture investors. Bill Gurley is a huge voice on this topic, which is that the traditional IPO process is excessive in its costs. Typically 7 to 10% of those deals going to underwriting costs, legal costs. There are direct listings. We've seen more of those where companies are bypassing that huge syndicate of bank underwriters on traditional IPOs to list shares directly. We've seen Spotify take that route. We've seen Slack take that route. So SPACs are now kind of a third option to pursue a private equity style deal where you're getting access to, in the best cases, an experienced deal maker, and you're merging with a public entity. That entity, that SPAC, is already public, so your business just directly goes public.
Yeah, really interesting. I had never heard of a SPAC before you brought up the SPAC attack. And I will say, when you said SPAC attack originally, when you sent me that email this morning, I immediately thought of the Zach attack, which was the band from Saved by the Bell with Zach and AC Slater and Jesse Spano and Kelly Kapowski. And yeah, that's immediately what came to mind. But I know now that I was completely wrong. Devin, it's always a pleasure.
Actually, Jeff, I just want to squeeze in. A lot of people have not heard of SPACs, but there are pretty brand name companies that have pursued these deals. So very quickly, Virgin Galactic, Richard Branson's space pursuit company, Atkins Nutritionals of the Atkins diet, electric truck maker Nikola, which is getting a lot of attention these days, DraftKings, the sports betting operator, Fisker, the electric car maker, and Brian Chesky, CEO of Airbnb, this week was asked in a Reuters interview whether he would consider a SPAC route for Airbnb. He said Airbnb has been approached by SPAC sponsors over time. He, of course, said, which you're almost required to say, that they're looking at all options. But that's something top of mind for some really brand name companies.
Yeah, I didn't mean to make light of the SPAC attack, but it just kind of took me back to my younger years when there was the Zach attack. Devin, always a pleasure chatting with you. Great information this week. Have a great weekend, and we will talk to you again very soon.
Sounds good, Jeff. Take care.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So we're back again tomorrow for BRN Weekly, our weekly retrospective show. We're going to have a great interview. You're going to want to check it out. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.